So we're here today to speak about cutting through the noise and spotting the signal. What's one piece of signal in the landscape that you've seen recently? What are we paying too much attention to, which is noise, which we should be disregarding?
Should we do intro first?
Sorry.
No, thank you everyone for being here. I know it's the afternoon, stretching your legs after lunch. Everyone's tired. Appreciate it. Thank you for the Caladan team for having us. I'm Zhang, the strategic advisor, Sharp Technology. It's just closed a 400 mil private placement, Solana, digital asset treasury, currently holding over 2 mil of SOL.
I'm Jiani. I'm at Solana Foundation, working a lot with the DATs in the ecosystem, including James and a few others. Yep.
Hi, everybody. Good afternoon. My name is Loren Asmus. I lead capital formation for UTXO management. We're the asset management division of Bitcoin Magazine and the Bitcoin Conference. And we were the first check into MetaPlanet that really jump-started this whole DAT ecosystem that you see today. Glad to be here.
I'm Giles. I'm a strategic investor at Hermeneutic Investments. We've been looking at a lot of DATs, invested in a couple, but mostly do event-driven discretionary trading and systematic.
Awesome. So noise in the market right now. Maybe I'll just play a little bit more devil's advocate because I know Loren, honestly, UTXO is one of the earliest in DAT trade space. So I know the bullish side will come from there. I think I'll say this. I think when you hear digital asset treasuries, like, what do you think? You're sort of to be like, I'm hearing it every other day. It's starting to have a little negative connotation versus positive, if we're being honest. And I think that's the framing of it. It's the Wall Street intersection with crypto that we're seeing right now. And that's what digital asset treasuries are. They're public companies. Look at retail. What did you have to invest in the last 4 years? You had Coinbase. I invested in the Coinbase DPO. It was $100 billion. It took 4 years to come back. That was the only exposure you could have to crypto. From the Circle IPO, you could see how much exposure retail wanted to actually crypto. And then follow that with bullish. You see Tether raising at $500 billion. Well, now these digital asset treasuries, they're actually just public companies that can give exposure to retail investors, and crypto investors buy tokens, right? You just go buy Solana. You don't need to buy STSS if you believe in SOL, but equity traders, they buy stocks. So I think that's the positioning that I think can weed out some of the noise.
Yeah, from the foundation's perspective, for us, it's really about providing the right vehicles for different capital audience to have access to Solana or any token of your choice. So like James mentioned previously, the only way you can have exposure to Solana is to buy it in your wallet. And starting this year, I think we'll beginning to allow broader access for Wall Street traditional institutions to be able to buy Solana through their brokerage account. That eliminates a lot of the friction and also opens up the capital audience more broadly from crypto native crowd to a more institutional sort of TradFi crowd. And for us, it's important because we are very excited about the ecosystem. We want more people to understand the Solana story, and opening up the access to this asset to Wall Street is a very important step. And for us, we see all the DATs in the Solana ecosystem as our super team on Wall Street in the sense that we want them to tell the story of why they choose Solana to hold on their balance sheet and what are they doing with Solana on chain as they start accumulating this asset in their balance sheet, and why the 8% APY is great because it represents a very robust economic sort of GDP of Solana economy, and that we want that sort of growth compounding story to be able to be told across Wall Street.
Yeah, I think it's really important to zoom out here. I mean, this really all started 5 years ago with Michael Saylor in MicroStrategy, right? He really took the leap back in 2020 after COVID of putting Bitcoin on his corporate balance sheet. Fast forward to today, his company is worth $100 billion. He has $70 billion worth of Bitcoin on his balance sheet. And he traded at a below 1x MNAV for a period of time during 2022. I think a lot of people forget that, but he held and had the conviction to hold Bitcoin, which he views as the best store value digitally native asset known to humanity, and kept that vision. So I think it's really important, even though there has been a lot of price compression over the last 3 months, that this is really the beginning of what we think are the next large, biggest financial services firms that will dominate over the next 10, 20, 30 plus years. For us, this is not a trade. This is something where we're building, the biggest companies that will have the best collateral on their balance sheet to incubate and grow more types of businesses in the future. And so we really think that this is just getting started, and you're going to have a Bitcoin treasury company in every major capital market around the world.
Great, thanks. I just wanted to speak about the sort of increased regulatory scrutiny over the last few weeks and months. We saw IP Strategy have their pipe blocked because they had too much in-kind contributions versus the cash that was being put up, and they had to push the launch of the pipe and do a shareholder vote. We've then recently seen regulators send letters to investors about front running of the vehicles, which have sort of seen pretty high multiples in the weeks and days leading up to the announcement. How do you think about moving quickly and operating in a space that's constantly evolving while also sort of sticking to regulation and making sure that you don't end up being charged or breaking rules, which then ultimately lead to the deals falling apart or being fined?
Great question. I think everything you just said, whether from Story Protocol, not to single them out, lots of in-kind contribution, SEC coming back with letters, this all shows how nascent, honestly, this entire trade is. It started 5 years ago with Michael Saylor, but everyone woke up a year ago, honestly, with UTXO and David Bailey with Naka and investment into Metaplanet, etc. And just look at that, right? Nakamoto invested into Metaplanet, and that investment is like a few hundred X, and that's all public company balance sheet. This industry is very, very nascent still in the digital asset treasury trade. I think that there's still a lot more to be done. That being said, if you look at the blue chips of the top 3 asset classes of what the new net buyer, like who is the new net buyer to all these assets when you go down the list, right? And when we look at productive assets, this is how we chose Solana with 8% native staking yield and what we can do in Solana DeFi. I think Bitcoin is digital gold, right? 10 years ago, you buy Bitcoin, you buy gold, you buy Nvidia, you log off, you buy every hedge fund in the world. Well, today, Bitcoin is that digital gold. And what is that digital infrastructure like Nvidia that can hold every transaction, actually have the throughput to do it and be commercially viable? That's Solana, and that's why we're excited about it.
No, I mean, obviously the regulation is very, very important, right? And the companies that we invest in, incubate in, it's all about doing things the right way, because these are long-term investments for us. And we see the 10, 20, 30 plus year vision for these companies. And I would say, at the end of the day, the reason for having a Bitcoin treasury company is to access institutional capital. And you're securitizing a digitally native asset and allowing institutional capital to now invest in that asset. And so the regulation and the reporting and the compliance needs to be A+ all around. And if you think about it, right, I think Michael Saylor has this chart where there's, $60 trillion worth of credit, $35 trillion worth of equity that can now have access to a digitally native asset commodity like Bitcoin that couldn't before. And so when you're talking about that level of TAM and that size, it's really showing that this space is starting to needs and starts to grow up, right? And so that's our viewpoint is, look, I think there's been a lot of folks that have moved very fast and have tried to gain market share. And, at the end of the day, the groups that are doing things the right way and are building the right way are the ones that are going to win and survive.
Great, thanks. To follow up on the in-kind contribution part, I think we've been seeing a lot of vehicles recently that have been incorporating locked tokens into the strategy. That obviously gives investors a discount in which they can access. So democratizing locked tokens, which used to be only something that institutions could have access to. Do you think that including locked tokens in the strategy is sort of like plus EV for participants, or is it more of an exit liquidity sort of play for early investors looking to cut short their vesting schedules and get liquid before they were originally supposed to?
Great question. I think it really depends on how your structure is set up, right? What are you doing with the cash you've raised for the token that you're going to buy? Well, we raised 400. The cash is used to buy Solana at the most accretive level possible, which would mean the cheapest Solana you can get. Whether that is in the form of liquid or locked, you have to balance that. And that's the amount of risk that you want to take. That goes into how much risk you want to take for how much yield you want to generate. Do you want to go into LSTs? Do you want to run validators yourself, or versus just working with asset managers, right? And that's why you see most of these DATs that are set up are run by asset managers, not by founders, because it's generally from capital markets experience and fundraising, right? Rather than you're actually doing Solana DeFi or et cetera things, which is honestly a big point of what we are doing as founders in Solana. But to that point, I think locked tokens really depends on which token, and also depends on how you balance it within. You probably don't want to take 100% locked tokens, but maybe you don't want to take zero either, and you want to have the lowest possible denominator.
Yeah, I guess not really as relevant for Bitcoin. So
Yeah, I think James represented the perspective. We've also seen the more recent Solana DAT, the raise has been primarily cash only, which shows that the sponsors are actually quite excited to raise cash to buy this asset and stake it, put it in DeFi, generate yield, and kind of contribute back to the Solana economy.
Great, thanks. I think over the year, we've seen a very large amount of cash and assets being raised through the treasuries relative to the liquidity of the tokens. During the normal market activity, obviously, I think the amount of tokens that the vehicles hold are not so they're not so worrisome. However, during liquidation events and market cascades, right when vehicles will be tested from an equity market perspective, but also the token itself, how do you model risk for liquidity events and making sure that the tokens that give the equity value will be able to be sold in an orderly manner during liquidation or FTX or Luna type events?
Great question. I actually love to hear Loren's perspective on the Bitcoin part and how you guys see Michael Saylor and their liquidation parts, because I think that would be obviously the biggest catalyst. For Solana, I think it's already happened, right? One of the biggest Black Swan catalyst events that set our industry back for years. And that person texted GM the other day, right? FTX. So if you think about how does anyone sell anything, you need to know all the players on the market. Even if you want to acquire LOXO, who owns that LOXO? Who's selling the LOXO? Who administered the entire FTX estate sales, right? Who's custodying that? This goes to who you work as custody. I think it's an entire infrastructure that's to be thought about there, and not just one price going down or going up that really matters. And once again, tying back to Solana, right now, Bitcoin has kicked everything off with Michael Saylor in the US and then went to Japan. Orange BTC in Gui, amazing shout out, just launched 400 mil on the Brazilian B3 exchange. You see this going geographically because giving what? Access to institutions and to users that might not be able to hold operational execution risk of the digital asset or hold that tax, right? So all of that for Bitcoin. You go to ETH, we don't need to say, who the North Star is there, Mr. Tom Lee. Amazing what he has done, truthfully. And then you go to Solana, right? And obviously, I believe in Solana the most, and that is why we're doing Solana as a productive asset and everything Solana DeFi. It's only kicking off. Every vehicle that's launched for Solana right now is pretty much in the US. You haven't seen that in any other market yet. Japan, Asia side. We just came back from Korea. You see the pent-up demand. Why does every token in crypto have a Korea strategy? We understand which exchange is there and how much trading premium there is. You're literally not allowed to short. So when things go global and when new capital comes in, I think that is a lot more interesting to think about and for us in the modeling sense.
yeah, it's all about leverage, right? And so if you look at really any of the Bitcoin treasury companies today, they're all by orders of magnitude over collateralized, right? And you could argue that MicroStrategy has the most debt, leverage with their pref offerings, but it's 8x over collateralized with their Bitcoin holdings today. So they have, I believe it's over $7 billion worth of prefs and convertible notes, and 70 plus billion dollars of Bitcoin collateral to back that up. And so when you think about traditional companies that lever up and take on debt and more egregious term debt that has maturity dates and you look at Strategy offering a 9% yield on their stretch product pref that has no maturity date, that's just going to be perpetual. They only have to pay the interest. There's more than enough to cover that debt today. So I think that's the biggest thing with Bitcoin treasuries is managing the debt profile. Obviously, from a token perspective, it's orders of magnitude the most liquid crypto asset out there. $2.2 trillion in market cap. And so I don't think that's as much of a worry. But you probably will start to see some companies out there that will take on really bad terms, do bad debt-oriented deals, bad converts, and then you're going to see the MicroStrategies and the MetaPlanets of the world or other asset managers come in and buy those companies at a discount. I think that's going to happen. We're not there yet, but the strongest will survive, and the ones who stay well under-levered will do very, very well.
Maybe just to add to a point there of the ones that can sustain and survive will do very well. What does that mean, right? In the DAT 1.0 world, this is my pitch to you. I'm going to increase your Solana per share. I'm going to increase your MNAV. I'm going to be the most aggressive in fundraising in the capital markets. Sell shares, get cash, buy Solana. Everyone's bored to hear that. This is why Gaz is not asking those questions, right? We're asking more interesting questions. DAT 2.0 world, you can think of it as a public company that your denominator is your asset. Well, for UTXO, for them is Bitcoin, for us is Solana. And all the strategies that you run around to increase that shows the management team. That is what investors are investing in, right? When I pitched the pipe round, I don't think I got a single Solana question. Most of the investors, Rockaway X, Verify, they're much earlier investors than me in Solana, own a lot more Solana. They're talking about James. Why can you deliver as a management team, as a founder-led versus asset manager, et cetera, right? Everyone's talking about perp dexes right now. Well, bulk trade or whichever perp dex that just got a very oversubscribed round, if you could do share swaps with them, right? Get allocation, get advisory shares from other DATs, et cetera, you're increasing what you can provide for your shareholders. LSTs, right? You can make certain public market announcements now versus just on crypto, right? Because in crypto, you do a partnership, X, KOLs, amplification, quote, retweet threads. What does a public company do? Press releases. Who watches press releases? Probably a different crowd than those that watch crypto Twitter. So to get outside the echo chamber crypto Twitter, I think it's really important for you to stress certain metrics and things that people can digest. Like Solana, amazing. 4,500 new developers, 7,500 new developers on board last year, 4.5 mil daily active wallets, 9 bill DEX transaction volumes. I don't think anyone will remember that after I just said that sentence, even in this room. But what you might remember is Solana did 900 million of revenue last year. Last quarter. That's a mic drop. For any industry, any company do $900 million of revenue in a quarter, what are you doing? And you have to look at it, right? Then Solana and the asset actually penetrates past the crypto Twitter chambers.
Yeah, I mean, that's absolutely right, James. It's all about execution, having the right team in place. And we're past the DAT 1.0. Like that's over, right? The days of just issuing your DAT, getting that 5x, 10x, 20x, whatever, those are gone. It's all about, do you have the team that has, one, at least on the Bitcoin side, the Bitcoin knowledge, has access to the Bitcoin community, but then two, the local operator in that jurisdiction, that capital market that knows how to work with regulators, knows how the traditional financial markets work, and knows how to speak that language. And if you don't have the two, you have to have the crypto native side, and you also have to have the traditional TradFi capital market side. If you don't have either one of those two, I don't think this works anymore.
I also would like to stress you have to pick the underlying asset very well. I think a lot of the tokens are, we've probably seen 200 DATs over the last year. Do I think every token needs a DAT? Probably not. But do I think the large cap tokens would have the capacity to launch 1 to 2 per token? For sure. And the best performing, best operate, best run managers will slowly emerge as, people take on more excessive risk and people start to ignore risk management when things are going too well.
Great, thanks. So one of the main selling points for DATs has been the underlying yield that you can earn on the assets while also giving exposure to retail or other investors. How do you think about earning yield on the underlying token without incurring too much risk and potentially losing the assets?
I think it's a very simple response for the Solana side because just native staking yield is 8%, right? On a 500 mil, you're earning 30 to 50 mil in basically revenue with very low capex costs, and Wall Street will on earnings calls give you a multiple on that, and that in it itself is already very interesting. Beyond going into all the liquid staking and some of the most amazing companies, honestly, in crypto, right? You look at the fastest company in crypto to generate to 100 mil revenue, Axiom, Photon, Pump, it's all on Solana, right? If you're a founder that, you know, just graduated, Ivy League, great talent, you're looking to build a protocol, what are you looking for? You need liquidity and you need users. And that chain is most likely going to be picked on Solana. 60% of the new tokens launch is on Solana. So I think a lot of it has to do with the talent and where the liquidity is.
Yeah, I just want to double click on the 8% APY yield on Solana. It's really, you know, broken down into a few parts. There's the base layer staking rewards, there's the GDO tips, and there's the MBV rewards. And the last two are actually correlated to how active the chain is. So the more economic activities are happening on Solana, the higher the latter 2% will become. So during the, you know, the February or January sort of meme coin season, I think the overall staking rewards of Solana went up to 10%. And obviously it fluctuates every week, every day, but it's really a direct reflection and correlation to how busy and how active the Solana blockchain is. And that's really unique because a lot of other sort of block L1s don't really have that mechanism.
Yeah, and obviously the Bitcoin, you can't really do, you know, that. But I know there's some unique option strategies that you can do to generate some additional yield on the Bitcoin. But I would argue you don't really need it. I mean, if you think Bitcoin's going to grow at a 30% CAGR over the next 20 years, that's pretty good. And then you lever on the balance sheet capital and you know, cheap cost of capital of a corporation. MicroStrategy has been the best performing stock over the last 5 years since they adopted a Bitcoin strategy. Metaplanet was the best performing stock last year out of any company over $250 million in market cap. So, I mean, do we really need to reach for yield when, you know, these are already the best performing equities on the planet just by investing through these, you know, corporate wrappers?
I completely agree. Before that, Jiani, I was just going to say, it's how much of that token you own, you actually can participate in the governance and you essentially push that ecosystem forward. So yeah, if you look at the growth of Bitcoin, of Solana, how much percentage has grown, you're not looking at 5 to 10% staking yield as much as that, right? So totally.
Yeah, I was just gonna ask, we welcome UTXO to bring your Bitcoin to Solana, where it's the busiest blockchain, we can generate yield for you.
I think there's probably things to be had there, definitely in the future. Yeah.
Clipped.
Great, thanks, guys. So more recently, we've seen newer pipes from BTC ones to also the altcoin ones as well. Vest as equity shareholders unlock, they've been selling and the vehicles have entered a discount, some of them 20-40% plus. How do you think about operating at a discount? And is there ever an appropriate time for you to sell the assets to buy back the shares?
I think no, please go ahead first. Yeah.
No, I mean, that's kind of the ultimate question, right? It's like, because technically if you sell the Bitcoin at a below 1x MNAV, you're accreting Bitcoin per share for your shareholders, right? You're accreting Bitcoin yield. But you could argue on the other side that if you do start selling your Bitcoin, could it just be a slippery slope all the way down of, you know, there's probably gonna be someone on the other side taking the bet of trying to egg you on of selling more and more of your Bitcoin. And given that it is a finite asset, a scarce asset, you know, I think there's probably other levers you can pull to try to get back to a 1x. Or at the end of the day, it's like there's a reason why you're trading at a below 1x MNAV, and maybe you shouldn't exist. And so there's going to be M&A, and there's going to be people acquiring. There's going to be companies that are going to be at a 1.2, 1.5, 2x MNAV that are going to acquire the ones at a 0.7, 0.8x MNAV, and that's going to accrete Bitcoin per share for that acquirer. And so I think it's that's kind of the great thing about Bitcoin, right? Is there's no safety valve, there's no bailouts. If you're not accreting shareholder value, or you don't have a reason to exist, then you're going to go away.
I think this is why digital asset treasury companies as a pubco offering access to an underlying asset is interesting, right? It's not the first one. You can invest in ETFs. It's always back one-to-one, and it's probably done by someone very reputable. But an ETF cannot sell their underlying asset and do share repurchase programs, right? And do a press release on that and bring your stock price up and instill confidence in shareholders. These are all financial capital tools to reach your mission, right? So I think there is definitely a point that companies should be thinking about selling some of their assets to instill shareholder confidence, because that is a theoretical thing. And I think, shout out, I think the first person to actually do that, the first company, was SharpLink in Ethereum to actually sell some ETH and buy back. And then a lot of companies since then has followed the lead after seeing the spike in stock price. So this is definitely a capital markets tool, and I think it's something interesting to explore.
So I think a large proportion of the price action of the different vehicles is driven primarily by the underlying assets beta. When this is the case, how do you evaluate the performance of treasury companies and their management team versus just the sort of like typical market dynamics that you would see, and ultimately the management team of the assets themselves?
I think the easy answer here is a rising tide lifts all ships, right? Solana ETFs in October, pending approval. Polymarket has a pretty high percentage. Everyone's very bullish. You look at the story of a top asset class paired with a digital asset treasury strategy and ETF approvals. You see what has happened already, and we're very bullish on that. I think the harder response here is, who is the management team? Like, who is it? Who is James Zhang? Who is, the UTXO team? Who is the everyone else? Do they have operating background experience, or are they asset managers? Are they full-time, or are they running another completely separate thing and sort of just did the deal? So really, I think it's when you get into the deep weeds of things, and this is why we're at the conference right now. We can speak to each other, can have conversations like, okay, maybe this guy isn't full of it, and potentially we'll have these tools that they can do when the beta drops, or when the MNAVs drop, or et cetera, or when they're at 1.5x MNAV. You can go and strike a deal with a company that's at 0.5x MNAV and maybe one. It doesn't even have to be on your asset class. You can show you're the apex predator by striking that deal, aggressive M&A, selling the underlying asset, win-win-win for everyone. But like I said, all of this is very easily said and very, very hard done on an operator perspective. So it comes down to the people at the end of the day.
Yeah, on the people front, I think, there are many DAT sponsors who pick the asset because it was the hottest thing at the time. They don't really have a very deep relationship or understanding of the ecosystem. From chatting with all the Solana DAT sponsors, it's pretty obvious that, some teams like James and, a few others, they do have very deep ties and understanding of the developer community and the founder community of Solana. They understand what DeFi protocols can do what at what risk. And that is very important if you're picking the sponsor, because you kind of want folks who are already in the know, who have access to proprietary proprietary knowledge about, DeFi, DePIN, RWA, all these very relevant topics that are being discussed in crypto today. And you need to trust their judgment on how to execute based on the mandate.
Yeah, I agree with all those points. It comes down to the teams, and with Bitcoin treasury companies, it comes down to whether you can raise institutional capital, and that comes down to execution, right? And trusting the team. MetaPlanet just did a $1.4 billion raise in Japan with Morgan Stanley, true institutional capital. Capital Group, a $3 trillion asset manager, has 11%. Is the largest shareholder of MetaPlanet now, has 11% of MetaPlanet, and so. It's all about, for Bitcoin treasury companies, at the end of the day, it's all about getting institutional capital to invest. And then it's going to be the next phase, tapping into fixed income markets, right? And can you tap into institutional pools of capital on the bond side? But that all comes back to what we said of you need to have the team, you need to have the execution, and that's how you get the big pools of capital to come in and invest in you.
Just add one more point. Look at the incentives. I think that's a very important part in the private around the public side, right? I don't own Solana, right? I didn't start Solana. So my bet is on STSS. Tom Lee didn't start Ethereum. He's not Joe Lubin or Vitalik, right? Probably wasn't one of the first investors in Ethereum. So his bet is on BMNR. So at the end of the day, where you're going to spend your time and how well you want to do something is where the incentives are aligned, no matter how good or bad. So I think look at the incentives and it'll be there too.
Great, thanks. I think over the last few months and year, there's been a huge amount of cash raised that's gone into these vehicles, which are locked up in SPACs and pipes that are yet to vest. We've also seen a sort of declining premia or compressing premia. Do you think that when all of these vehicles ultimately unlock, we'll be able to see a premium going forward? And is there a space for DATs that don't trade at a premium, or do you think that vehicles will still be raised and money will keep going into these vehicles as the premium continues to compress, more shares unlock, and ultimately liquidity dries up on the equity side?
Yeah, I mean, I mentioned this earlier. I think we're past the 1.0 DAT phase of where you're going to immediately trade at a huge premium unless you have some reason to exist or a differentiator. Right. And so like at UTXO, we want to invest in the MicroStrategy of the region. Right. We think it's going to be a winner take most market in Bitcoin treasury companies. And we want to be the one incubating, investing in those winners and the MicroStrategy of that region. So we'll see on the premiums. That, I would also say that MNAV in many respects, or the premiums, are a reflection of market sentiment. Like you've seen all these really just trade down simultaneously kind of across the board. Right. There's kind of really no market differentiation right now. I think now that we're kind of close to these, 1x, 1.1, 1.2x MNAVs in many cases, you're going to start seeing the market really kind of parse out which teams can execute, which teams can access institutional capital, which teams can access fixed income markets. And then I think that's going to have a repricing on the potential premiums. But even if these companies trade at a 1x MNAV, if Bitcoin's growing 30% a year on average, and you're able to own it through these vehicles, that's still a pretty good floor.
Yeah, my honest answer is I really don't know. It feels like I can name you 5 companies right now trading below MNAV. I can name you 5 companies right now that are trading above MNAV. There has been no M&A. There has been no change in communication or messaging, right? There are companies that have not registered their shares yet. Investors are not unlocked and there's a low float. There have been that have recently registered, that etc. So everything that was mentioned is currently happening. I think this is why it's so interesting, because everyone is trying things, as the entire trade is very new and for very different asset classes, and there's very different incentives, right? For the Story Protocol, they started their convo with maybe the DAT, how well it does after the shares register, etc. It doesn't matter, because as long as Story, the token, does amazing, right? And they don't have a foundation that is as active in supporting the digital asset treasury. So I want to tie things back really still to people. And I think that's where you're going to see the differentiator. I see in the back, there's Scott from Super Team Korea. Big shout out. Had a huge help to us in connecting institutions, etc. When we went to Korea last week and KBW, right? Who am I supposed to ask for that if I was building on, not to say and single someone out like Bitcoin. I can ask Satoshi Nakamoto to make an intro for me to an institution in Korea and to help further the agenda. So end of the day, it comes to the people and the support you're going to get that will really help you. Because as we know, crypto is a huge community and very different niches of aspects.
Yeah, I would just say pick the right asset to own and the right management team. And then, stay afloat.
And I'll go back to the initial question about zooming out, right? Like there's a lot of people looking at premiums and MNAV and current valuations. I don't know if anyone here is familiar with Jesse Myers. He's with Smarter Web Company, one of our portfolio companies in the UK. He thinks that Bitcoin treasury companies will eventually own 50% of the Bitcoin supply in the next 20 years. That's the opportunity. That's a huge opportunity, right? And so whatever MNAV trades at over the next week, month, it's kind of irrelevant if you think that these corporations are going to own 50% of the Bitcoin supply in 20 years. And where's the price of Bitcoin going to be in 20 years? Michael Saylor thinks it's $13 million a coin. So that's a $180 trillion market in 20 years. Sounds crazy, but that's kind of the TAM that we're thinking about.
Cool, thanks. I think we're at time. Before we end, is there anything else that you have to say around the future of DATs and looking forward? How do you see the landscape evolving? Is there anything in the next 3-6 months that you think is going to significantly change?
Maybe just one last thing I'll say is we live in a world of a lot of information, right? You got to aggregate that info and then see through the noise. So just keep your eyes open. I know a lot of those announcements get old, but literally not even 3 to 6 months. I think in 3 hours, right? Monday morning, pre-market US time opens. There's going to be a few more DAT announcements, and you're starting to see how it's shaping. It's Jesse, Smarter Web Company, amazing. They started like Q1, right, of this year, and just said, we're going to DCA into Bitcoin. I don't even care at what price, etc. And they were one of the earliest. So a small amount, just like Metaplanet, went up. Then you go to more institutional and down the asset class and cross geography. And now, in 3 hours, let's see what the new one is. Is it institutions launching it, or is it a founder-led the DAT? So I think that's where the parity will start to see.
Yeah, I'll just say again, it's all about making this an institutional asset, right? Like this is the medium to do so. And for us, this is not a short-term trade. UTXO, we're thinking long-term. We want to be investing in these companies for decades on end and supporting them. And our mission at BTC Inc. is to hyper Bitcoinize the world. And so we think this is a way where we can try to get to that goal. We'll see.
Cool, great. Thanks for taking the time today, guys.
Thank you, bro.
Thank you.